first thing was, BI360. Let's just go back real quick. We're taking data from any data source, bringing it in a SQL Server, allowing you to build reports, budget, forecast templates, and then as well as visualize the data. So the first thing is we got to get data really from an infinite variety of sources into the data warehouse. More importantly, how do we get data into the data warehouse? As I was getting into, I'm going to go to data, then my integrations, and we can integrate with an unlimited number of sources of data. I'm going to pull up something where I'm integrating with First Sentinel Bank, hit my edit button, and it starts off with some files. And like I said, these files can be views. They can be virtual views. They don't have to be physical tables, but a select statement of some sort or an actual CSV file. Here I'm connecting actually to a couple of CSV files, got them pointed out. Once I've got those source data, I got to do something with it. I'll go to the category code. So first thing is I'm loading category codes. So I'm loading it into a dimension or a key set, if you will. These are the keys. This is the source table that it's coming from. I've got a handful of fields, but category is one of them and description is the other. And I'm mapping it into my dimension or my key set in my data warehouse where it's a code number for my category and the description. So I'm just simply mapping it in. So the point being is I can take data from any customer, any client, any source data, and just map it into my existing data warehouse. I just need a code and a description that's unique to that bank. So that's all I'm doing is mapping in the category codes. Next thing is I'm mapping in the data. So instead of keys or dimension, it's a table now, or what we call a module. So I'm going to bring in a lot more data now, the field records, so a lot more fields coming from my source. These are the source data, mapping it into my warehouse. Let's say it's a brand new field. My new customer all of a sudden wants to start tracking branch number as part of the reporting. No big deal. They just simply drag and branch into new field here. And then is it a text? Is it an amount field? Is it an integer? Stuff like that. They just map it in. So you're just going to map it in one time. So unlimited variety of sources of data mapping into a very robust existing data warehouse. But if you have tables that you like or you have an existing data warehouse structure, we can adopt those. We can build something on the fly based on your source data. But we've got a robust model, but we can very easily map what you've got into ours and add lots of fields. So we're going to set it up the one time. Cancel out of here. And then just put it on a schedule. We'll just set it up on a schedule. Do we want to run it daily, hourly, monthly? How often do you want this raw data to run? Now that it's running, the next step is I want to start seeing some reports. Everybody has a batch of reports that they need to do every single month. And it starts with the data. So we talked real quickly, we're going to map in your data, source data, whether we connect directly to it, whether you give us views and we get it indirectly through a view, or you push the data to us, whether it's a CSV file. We don't care. We've loaded it in the warehouse, and now we've got this battery of reports that are going against these warehouse tables. And again, this is just an example. There's a bazillion examples. I'll just pull up a very typical monthly batch of reports that we typically see. You're going to close the books. Everybody needs to close the books of some sort. And it starts in this case here, we're assigning it to various people are responsible. but somebody's loading the data. So I just walked you through how to manually load a table of data, the dimensions for loan codes, new loan categories, and then the loan data itself. Well, there's going to be someone doing that for security, someone doing that for loans, someone doing that for deposits, making sure the stuff's loaded, balanced, all that good stuff. Then someone's going to go ahead and run the company reports. Got all these various reports, so they're going to tick and trace those types of reports. So let's just pull up reports. Go ahead and close this, and I'm going to go into cancel that. Sorry, I'm going to go into product profitability, and let's pull up loans. And so here I pulled up installment loans. You can run it for any number of products, but I'll just leave the installment loans up. And all I'm doing is I'm measuring this portfolio over time. So we're snapshotting the installment loans. That data file that's being loaded, my loan details, obviously, is my balances, my collateral codes, my loan type codes. So this is an $11 million portfolio that's being loaded over time. Then I've got production. What amount of these loans are being originated each month? So 461,000 in the month of January, 388,509, 38 loans originated. If I want to know what makes up any of these balances, these records, these amounts, just simply do a right mouse click and drill into it. It's going to give me back those records that makes up those originated loans, those 38 records, if you will. So it's just simply going to hit that table, pull in all those loans. There we go. All right, so there's all those records. So I can drill into it, customer names, all those good information. So that's simply historical information, looking at maybe a product profitability, loans over time. But the title of today's theme is getting data from your experts. So here, this is great. I can do historical loan reporting, balances and such. But again, my role, instead of being a historian, is I need to be very proactive. So, all right, great, I've automated trend analysis and such. But I got to turn this around quickly to come up with an action plan for next steps. So my role is changing rather from that historian to a future person. Let me cancel this out of here, sorry. I'm working on a CECL project. And part of the challenges with CECL is I have to predict loan balances, future balances. And that's driven by a few things, loan balances. Obviously, retention. A mortgage loan, in theory, hangs around longer than a 2-year indirect used car loan. Stuff like that. Hopefully should hang around longer. So I've got this forecast here. I'm going to go ahead. I'll just go ahead and run it here. Where what I'm trying to get from the field is ultimately loan balances, and it could be by branch, it could be by collateral code, it could be type code, it could be by officer, it could be by any number of ways. But at the end of the day, I need my balances for a particular loan type over time. And historically, I would ask somebody, the asset liability manager, and they're using these forecasted balances to come up with the net interest margin. I'm asking the product manager to come up with origination amounts to come up with marketing dollars. I need so many direct mail pieces, so many email campaigns sent out, phone calls set up. So different people need different things for different reasons. My ALCO manager needs balances to drive my net interest margin. And then my marketing manager needs origination amounts to drive the marketing dollars. So my challenge is I can ask accounting, hey, you've seen the historical production or marketing dollars. Just use inertia. And you've seen historical balances. Just use inertia for net interest margin. Just like, why would I put all that weight on the accounting team when all I got to do is ask the field a couple of questions and I'll get much, much better information. So what I'm doing is I'm looking at historical origination amounts by month for a specific category. And then, so let's say for mortgage, but let's say I want to use it for installment loans. I just pick a different category, run it. And so I've got my monthly balances. So it looks like it's 65 million in December, but then it's dramatically growing here in the out months. In these out months here. And what we're showing is the amount that was originated in May. But here was the month-end balance, and here's the net growth. So here's prior month ending balances. So here's the amount of retention. So said another way, based on last month's balance, 98% of last month's balance was retained. So almost 2% of it automatically just paid off, refinanced, paid down, so that it just goes away. And then we add on new production dollars, and that comes up with the current month-end balance. And then we go to next month. 99% of last month's month-end balance was retained. Plus we have origination balance equals our new month-end balance. So that's the history. So I'm not going to ask my branch manager or whatever to predict month-end balances. I've got historical retention that I'm using to predict my retention. All I want the branch manager to do is come in and tell me what they think they can realistically originate. 4 million a month. All right, but I want them to really start growing loans next year. And so I expect them to start increasing their production by 10%. So now it's 4,400, 1, 2, 3. As soon as I hit that, you'll notice my month-end balance is going to jump a little bit because I've got more origination dollars added to the previous month end. There's now a spike in the new month-end balance because I got more production. And now I'm going to do that again, 4,400, 1, 2, 3. And you see there's a spike again. Now this is, everything's just like Excel. I can just drag this across. So I'm not going to type it in every single time. So I'm just going to drag it across. And so here's my 48 million, 4 million a month last year. Now I'm doing 4.4 million a month. So I've jumped it, 4 million, 8, so a 10% bump. My point-to-point growth. Last year, that got me $28 million in point-to-point growth. Huge growth. Fairly young portfolio, though. So, big increase. But now going into next year, I've got a huge balance that's starting to pay down. So even though my production has jumped by 10%, still not enough growth. So I'm going to still turn this in. I'm saying, hey, I can produce 10% more than I did last year, going after bigger tickets. There's more fish out there, people looking for more loans, blah, blah, blah. But you're going to have to come back to me during the review process to say, hey, I need you to grow this to 30 million. Then if you tell me that, then I'm obviously going to massively up this. and request more. So I'm going to go ahead and hit save. That's my best guess. So I'm writing that data back, save. And so I've written my data back now. As soon as I've done that, I've loaded up my forecast, my first pass at loans. As soon as you catch a couple of drivers, if I'm the asset liability person, now I see new loans each month and balances, and I can start doing this for my mortgages, my CDs, my demand deposits, and start coming up with my net interest margin forecast. If I'm the marketing manager and I've got this for all my loans rolled up by market, and I can see what I'm on the hook for as far as generating origination balances. And I know how many direct mail pieces I need to send out, or how many emails I need to send out. But you know, it's $1.50 per new customer. Now I know what balance is. So much can be given to me now that I have some origination balances to run with. So that's, you know, getting expert information from maybe the lending folks out on the field. I may want lots of other information, so I'm going to go to another demo here. Give me 1 second here, sorry. And same thing, I may have a whole big process. So just like I had a reporting process where I'm closing the books, I'm updating my forecast, what were my new loan volumes, and that's going to drive all sorts of goodies, payroll, things of that nature. So now this is just a little bit downstream. Now that I've done my volumes forecast, my volumes budget, because that drives everything, whether I'm a lending institution, whether I'm a sales organization, whether I'm in retail selling cans of soup. Everything comes down to units, number of loans, dollar amount of loans, number of cans of soup that are in aluminum. That doesn't matter. It's the same thing. But the next thing then is my people budget. So much of my people budget's intertwined with my production budget. How many sales reps do I need? How many loan closers do I need? How many underwriters do I need? It's all downstream once you've captured those volumes. Now you're just pegging lots of rates and assumptions. So every single payroll has some type of tax assumptions, benefits assumptions, insurance assumptions, that type of stuff. So here are my payroll taxes. My maximum amount I'm going to withhold up to the maximum amounts stuff. I have a capital spreadsheet. They might be getting leasehold improvements. They might be getting copy equipment. You might be getting loan origination equipment. Who knows, with different lives. So when they put that on the books, how many months does it need to be depreciated? And capturing loan balances, how many days of the month is that average balance going to be out there to calculate my net interest margin? So many assumptions you're going to be capturing on the assumptions page that could change. So you're going to want to have a way of capturing those rates, those assumptions and such. Next thing is you're going to be asking expert information from the about personnel, whether it's coming from your HR group, whether it's coming from the branch managers, the department managers. I've got these volumes expectations. My loan originations need to go from 48 million to 54 million. How am I going to do that? Well, right now I got this on my staff, but I'm going to need to add, another loan originator. If I knew how to type, that would be helpful. Yeah, I'm going to need a loan originator. and the date's going to be 6/1. So the higher month will be, say it's going to be July. The end month, they're going to be here through December. And they're going to be here half-time. So I'm not going to get them the full amount, $57 an hour. All right, so that's calculated. So 57,000 is their annual salary, annualized salary. So I just type in some information. You can see it's going to calculate all sorts of other information downstream. The monthly salary amounts, the total compensation. That's going to start calculating taxable income. That's going to start calculating my FICA taxes, my FUTA, all that good stuff over to the right. That's just simply Excel cross-multiplying the rates that I put in against the various hours, and then down below you can see these are the various accounting fields that I'm posting all my summary to. So that's how you're going to capture payroll information. You might have a travel budget where you're capturing very detailed information. I'm going on 3 trips. This one trip is in May. It's to Nashville for a convention, and the purpose of the convention, so I'm capturing notes. I'm capturing maybe a purpose, it's a lending convention, and I'm there to learn about lending. So whatever the purpose is. But you're capturing very detailed information about travel, because the travel is a big budget item for you folks. So you're going to build detailed input sheets. They're going to capture the biggest chunks of your P&L. So obviously balances is driven by origination amounts, loans and deposits. Personnel expense is driven by headcount, people, rate. What are they doing? But then you're going to have others like travel or professional fees. And you may have a laundry list of other stuff, 20 other controllable expenses, paper clips, things of that nature, where you just want that branch manager to just give it their best guess. Those types of miscellaneous expense items, there might be 20, there might be 30 or 40. That may be just as fine in the hands of accounting. Those are such small items when you add it all up. Is it really worth having 20 people tracking a $6,000 budget item? Or is it worth just having one person tracking, 10 or 15 of those items? They can just look at trends for the whole company, and the trend is much better than, it's just, so you decide how much raw data you want to capture. Excuse me. So we talked about capturing data directly from your system, whether it's a direct feed, whether it's loaded via a view, whether we're loading it via CSV files. We've talked about capturing forecast data from all your experts. Volumes is going to be one of the most critical things to capture. New loans produced. What's driving the main piece of your revenue? Loan production, deposit production, new trust account, new wealth management accounts. And then you're going to obviously want to track other line items. Payroll's a huge one, but other various expense items, non-interest income items, trust fees, maybe merchant discount. It just depends, interchange fees. Let's track those, but you just don't want 100 people tracking very small line items amounts. So if it's a small dollar amounts, aggregate those into big pools and assign that to 1 or 2 people in accounting and let them track all that under miscellaneous expenses. It'll be good enough. So now I've loaded all my data into the system. And we've talked about some reports, but let's say I just want to build something from scratch. I just want to analyze some of this stuff. So let's say I want to do a report from scratch. Sorry about that. Dan's loan report. So once again, it's opening up Excel. As I mentioned, it's an add-in to Excel that's going to expose the tables within your data warehouse. I just simply have access to many different warehouses and such. I just wanted to pull up a very specific table. So let's say I want to do something on loan, and I want to look at, say, account. I want to burst it on row. Within account, I want the description, and I want the, let's say, the customer oops, customer description, and a second here. The entity, I want it to be at the column level. The period, I want to be at the column level. The scenario, I want it at the column level. And then balance month end. Balance month end. And so now I want to do some restrictions here. So I want to say the entity is this First Sentinel Bank. The period is for January. The scenario is for actual. Go ahead and run it. All right, so let me go ahead and format this so it's a little easier on the eye. So format cells. It's a little wider. Run it again. All right, so it's running it for January, and it's basically pulling in commercial loans, mortgage loans, installment loans. So those are the different types. Apparently it's all the same customer, but these are my amount fields and such. So easy to pull in something, so that's just for the 1 month. Now let's say this information is not going to really help me much here, so I'll delete this, align this much more. And now let's say I actually want this as a range of months. So now let's say I want it for through September. And so I want it expanding. So I'll go ahead and run it again. And very quickly, now you can see I've got my range of months. These are my actuals for the first 9 months. Then if I want to start building a forecast, I'll simply copy to a paste. And I'll just say, now let's grab the last 3 months. And rather than my actual, I'm going to grab it from the forecast on the exact same report. And so I just don't have anything there posted. So that's when I start developing my forecast and publishing those balances. So, right now it's just capturing the originations. If I publish those balances as well, then it's going to update the forecast here. and now help me, if I'm the asset liability manager, to assign net interest margin. If I'm the marketing manager, assign those marketing resources to direct dollars, advertising expenses, giveaways, that type of stuff. All right, so we talked about getting data from the system into the data warehouse. We talked about having reports sit on top of that data. We talked about being able to augment that data. Once it's in there, I want to make forecast changes, budget changes. I want to react to it quickly, get my thoughts in there. I'm going to really have to ramp up home equity lending in these 3 market areas. What does that mean? How do I go about doing that? And then getting feedback from the experts. Where's the origination dollars coming from? Where are my payroll expenses going? Capital, travel, all that stuff. How to build something. So I've got all sorts of good data, but still, we love to visualize our data as well. So looking at the exact same loan data, the exact same customer we've been looking at the whole time here, where we did the loan forecast, how we did payroll, is we're not just looking at the loan trial that they gave us, and they wanted to see for marketing purposes, where should they be spending marketing dollars? So what they did is they took the loan trial, they took the zip codes of those balances, and then they assigned the zip code to the nearest MSA, Metropolitan Statistical Area or Analysis. What's the lead zip there? And just simply assigned all balances there. So essentially, if I'm looking at this big one here, if I click it, Charlottesville. So in the whole area, there's $92 million clustered around the MSA Charlottesville. And they've got a reserve of amount of 837,000, so or a loan loss reserve of 91 basis points. But you can see that's the biggest circle, $92 million balance. So if I'm doing a budget for marketing dollars, I know I've got to include something that covers Charlottesville. But then visually, if I go to the next biggest one, not as big, but it's Kingsport. Drastically different markets. Need to go after them very pinpointedly, but that's, half the size of Charlottesville. So it's still a monster area. It's got to be covered. So even if I spend my marketing dollars on just 2 areas, I'm going to spend it at least on these 2 places. That's where all my loan production's coming from. But then if I just keep going further down, there's 24 million in Collinsville as far as balances are concerned. Danville is huge, 23 million. Go a little bit north, that's not as impressive. Go to Richmond, 108,000. But you can see by taking BI360 data and loading it into Power BI, and this, I'm just messing around with it. There's so much you can do with Power BI. Maybe I want to track originations by market. I want to track maybe origination fees. Volumes is one thing, but where's my revenue? What do I make off my volumes? Maybe I want to see that by market, or maybe my ratios. It's I'm collecting 1.25% in fees off of my balances in the Richmond market, but I'm collecting, a different rate in a different market, 91 basis points in my Charlottesville office. If I go out to Nashville, it's 25 basis points. So you got balance, you got all sorts of things that are changing, moving and such. Power BI is just a fabulous tool to just get your eyes around lots of good data points. But if I'm spending marketing dollars, I'm just going after where the big bubbles are, where the big opportunities are. I may have balances coming from Virginia Beach, but it's a portfolio of $50,000 or less. Let's touch Virginia Beach. it's $24,000. I'm not going to waste any marketing dollars after Virginia Beach. There's no opportunity. There's nobody there. A waste of my time. I'm going to spend it in Charlottesville and other places. So hopefully this has been helpful. With a tool like BI360, we're going to be able to grab data really from anywhere. We're going to allow you to build unlimited reports. We've got a huge catalog of pre-built stuff, but as your data needs change, as you bring in your own unique data characteristics, your reports are going to need to change. But we're going to allow you to build a huge catalog of reports very, very fast with our flexible data warehouse. You're going to be able to then make changes to any of those data points, particularly those big data drivers that drive so many parts of your forecast. Loan production, deposit production, headcount planning, capital planning, non-interest income and expense planning. Very, very specific items, but it's not a lot of items, but very tactical information. You don't want, 100 people tracking hundreds of items. You want maybe 20 people, each one tracking a couple of things, and they're very good at tracking those things. The loan origination expert. I'm very good at tracking, new loans, or, I'm responsible for headcount. But make sure it's the experts that are coming up with the forecasts and the budget numbers. And with BI360, you'll be able to build, track all those plans, those various forecasts. We've got all sorts of approvals. And then the icing on the cake, just the visualization. How do I wrap my arms around it? But make it easy to digest. Then Power BI can just simply take all that data that we've been working with in BI360 and allow you to visualize it in so many different ways that makes your data very compelling, yet easy to understand. All right, well, this has been Dan Havey. I hope you found this helpful. If you've got any questions, comments, I would love to hear your feedback. All right, well, that's all I have then, folks. Again, thank you for your time, and I hope you found this informative.